Morning, guys. You can see time is around 9:32. Let's look into Saturdays and Sundays Bitcoin trade analysis. And what we need to do is to plot the weekly VWAP level and see in case if the market is trying to take support or resistance. As you can see, the market is trading way above the daily weekly VWAP level. I think that doesn't hold any significance. What you can expect is that VWAP acts as a magnet and you can expect market to come towards the VWAP level. But what you need to look here is that this is Saturdays and Sundays where the market is trading above the 21 moving average. And you can see the market here showed kind of huge bullish momentum. And you can see the market is trading above the upper limits over here. There was no even a retracement to the 50 levels or the 0.38 levels. You could have expected the market to come to this 50 level over here, or you could have expected the market to come to 0.38 level. But here you can see clearly the market is trading above the 21 moving average and even the upper limits of this impulsive momentum towards the upside. And on Monday, you can see price rejecting from these levels, guys. You can see the market uh, made a higher high. Before that, the market broke this high, and the market failed to make a higher high here. So what you could have expected next is to look for bearish trade, guys, and you can expect the market to break these levels and even this level as well. So what you can see is to take short position. Currently, today is Monday, and you can easily keep above the 200 moving average, and you can expect the market to come all the way to this low, guys. So there is a high chance the market might reverse against rejection of price from 200 moving average also. But as you can see, after this kind of bullish momentum, you can expect the market to continue further bullish, and you can expect the market to break the high of the this impulsive candle. So let's look into a smaller time frames and see how the market behaved on Saturday as well as on Sunday. Coming to Saturday trade analysis, guys, you can see the market here. So kind of huge bullish momentum. And what we need to is to mark the high. This is the high of the Fridays, guys, that or you can consider yesterday's high. And looking at Saturday's, guys, you can see the market, there is high chance that the market might break towards the upside. And what you need to see here is that if you try to plot the daily VWAP level, you can see that's the daily VWAP level. And what you need to mark is the mid of the first candle. So you can expect that to be the mid of the first candle. You can see in case if you try to plot the fib levels over here, the low to high of this candle. So you can expect this is the mid of the first candle, guys. You can see this is the mid of the first candle. And you can expect the market taking support and continue further bullish. And this liquidity over here would definitely the market might continue or hit that level. But what we need to see is to look at previous swings, guys. So what you can see is you can see the rejection of price from higher high here. The market may sweep this high liquidity and can close below this level, clearly considering sweep of liquidity. So you can see after that the market clearly broke structure towards the downside, or you can consider this break of structure or this break of structure over here. Or you can see, guys, in a 5 minute time frame, the market clearly broke this structure, clearly indicating a chalk formation. And if you consider this swing momentum, the common point between this to the common point between this, so you could have expected the market to reject price from 0.38 level, but definitely the market came all the way to these levels. And after this, the market formed a piercing pattern here. You can see the market came all the way to 0.38 level. Here, the market didn't touch rise, but definitely the market is showing some kind of bearishness only. And after this, the market formed a piercing pattern and market is trading below the 9 as well as the 21 moving average, clearly signifying bearishness. So you could have expected price to return towards the downside. And you can see another trendline liquidity also here. You could have taken short position after this break of this trendline liquidity as well. You can see that when compared to this impulsive momentum towards the upside, you can see this momentum, even though the market went and broke the structure high, this kind of momentum is clearly signifying bearishness. And what you can see is a clear channel pattern formation over here. Well, as very balanced moves, there is no imbalance between here, but definitely you can see very good imbalance over here, very good imbalance over here. And you can see price taking support from 200 moving average. So what you can see is to look for higher time frame and see where the order block level might have been respected. So what you can see here is that if you consider this whole swing, guys, over here, the low to high of this candle. So if you try to plot the swing low to swing high here, You can see price taking support from 550 levels. Here you can see the market came and mitigated this 550 levels over here. So let's mark the 550 levels and look into a smaller time frame and see. So this is the 550 levels, and let's look into a time frame, 5-minute time frame, and see how the market here respected. And you can see this consolidation over here, which actually broke the structure high. So you can consider this order block level as well. The last down candle, you can see the market came here. This is the 550 level, as well as you can consider this to be a 1-minute order, 5-minute order block. And what we need to see is that in case if the market sentiment would have been bearish, guys, the market would have continued further selling towards the downside. You can see here. I would like to come to that later, guys. Let's see previous price action. You can see the market here retraced all the way to 0.38 level, but definitely the market failed to make an higher high. Instead, the market clearly broke this structure over here. You can consider this to be a clear break of structure. And if you consider the common point between this to the common point between this, and what you can see is the 550 levels over here. This is the 550 levels where the market here kind of retraced all the way to that levels. And if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move, or you could have targeted it all the way to 1.68 level. But definitely you can see the market here facing resistance over here. So you could have easily taken short position here, guys, keeping your stop loss just above that candle itself. And you could have traded all the way to this 200 moving average. This was one trade setup where you could have taken, but and for confluence, you could have easily plotted the anchor way up level over here. And you can see rejection of price from this anchor way up level, clearly signifying bearishness. So keeping your stop loss just above the anchor way up level, you could have taken short position. The resistance over here is acting as support over here, you can see, which I would like to teach you further, guys. But let's not consider that into trade. But what you need to see here is that you can see clearly the market broke this structure low. You can indicate this as to be a clear break of structure, and there was a very good impulsive momentum. And what you can consider is to consider this to be an order block level, and you can consider this also to be an order block level. But what happened here, no guys, if you consider this swing momentum, the market came retraced here but failed to make a lower low here. You can see the market instead took support from this 200 moving average and was continuing further bullish momentum in a 5-minute time frame. And if you consider this swing momentum, guys, the common point between this to the common point between this, you can see the 550 levels also has been broken towards the upside, but market faced rejection from 0.78 level. But after that, the market would have continued further aggressive towards the downside, breaking this low. But here the market failed to make a lower low here, clearly indicating that there is some sort of demand. Instead, the market here internally broke structure here, clearly changing the market sentiment from here being bearish to bullish. And this is the initial chalk formation. And market again failed to make a lower low here. Instead, the market even broke this high as well. You can see clear break of structure. You can see, guys, this is a clear break of structure towards the upside. You can consider this to be a rejection candles, but definitely this large down candle which actually broke this high also. So you can consider this candle to be an order block level, because you can see this is a large down candle which actually broke structure here, guys. This high also. This high also was broke by not because of this impulsive momentum. This impulsive momentum is a very balanced move, guys. You can see there is no fair value gaps here, as well as there is no imbalance also. But definitely here there is a very good imbalance. So this order block level is a very good order block level, guys. You can consider this to be a 5-minute order block and try to extend it over there. You can see how the market came and mitigated this order block and continued further bullish momentum. But if you consider this order block level, guys, so the common point between this to the common point in this, you can see the price taking support from 550 levels over here. This is a 550 level where price is taking support. And if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, you could have easily targeted the 100% move. This is the 100% move where you could have taken short long position here, guys, keeping your stop loss just below that candle and targeting all the way to this 100% move. So this is how you could have targeted. And you can see this kind of momentum towards the downside, clearly signifying some sort of bearishness. And here you can see the clearly market formed a chalk over here. And if you consider the high of this candle to the common point in this, again, you can see the market rejecting price from 0.38 level over here, 0.38 level. And what you could have done is to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this. You can see this is the 100% no. But in case if the market sentiment would have been bearish now, guys, the market would have clearly broke structure towards the downside with very aggressive momentum with no fair value gaps or else imbalance. You can see again the market broke structure here. And if you consider this swing momentum, the high of this candle to the low of this candle, you can see the market facing this resistance at 350 levels. But in case, guys, the market reaching the order block level, you can see this is a clear order block level, guys. So I hope you're understanding what I'm saying. But you can see this kind of momentum, guys. There was no impulsive momentum towards the downside. In case the market is trying to break these levels, guys, we could have expected a huge bearish candles like this with fair value gaps or imbalance reaching this order block level. But definitely after the market mitigating this order block, you shouldn't have entered long position, but instead you should always wait for change of character. You can see clearly the market found a choke over here, showing some sort of demand. And if you consider this swing momentum, if you try to plot the anchor way up level here, you should see price taking support here. Or what you could have done is to plot the fib levels, guys, after this chalk formation. So the low of this candle to the high of this candle. What you could have done is to plot the 550 levels over here. You can see this is the 550 level. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this. For the first target, you could have targeted the 1.68 level over here. And you could have targeted it all the way to 4.26 level. You can see how the market came all the way to 4.26 level over here. Or you could have traded as long as the market is trading above the 9 as well as the 21 moving average. You can see how bullish the market is, guys. Here the market kind of showed some kind of bearish sentiment just to target all those buyers who might have entered here, and you could have expected the market to reverse because here there was a fair value gap here, guys. You can see the market here. Here there was fair value gap. So what trade position is you could have taken long position here, keeping your stop loss just below this daily gap level. And what you could have done is to targeting all the way towards the upside. This is how you could have targeted, guys. You can see how the market very aggressively went all the way towards the upside. And in case if you try to plot the Fib extinction levels here, the common point between this to the Fib extinction levels, let's try to plot it out. The common point between this to the common point between this to the common point between this 1.68 level. In case if the market even breaks that level, guys, the 3.6 to the 2.68 level is where you need to target. And next target would have been this level over here. You can see, guys, this is where exactly the market came and reached. So what you could have done is to hold your position all the way to double of this. This is the 4.26 level. And if you consider this swing momentum, guys, and what you can see is, you see this, there is an order block level here where the market here showed some kind of inducement level here. This is a clear inducement, guys. The inducement level and the market mitigated this order block, so you could have easily taken long position here, keeping your stop loss just below that candle itself, or you could have waited for chalk formation. And definitely the market here found a chalk over here. And after this, you could have waited for a retracement to 0.38 level or the 550 levels. So if you consider the common point between this to the common point between that, you could have considered the 0.38 level as the area where you can trade on retracement. And if you try to plot this is the target where you could have fib extinction levels. This is where you could have targeted, guys. I hope you're understanding what I'm saying. So the long position here, keeping your stop loss just below above that candle, or in case if you try to plot the anchor way up level here to this swing low here, and see in case where the price is trying to take support, you can see price taking support at these levels, and this is where you could have targeted, guys. I hope you're understanding what I'm saying. If you anchor way up levels are just for confluence, guys, so you could have easily taken under confluence, and you could have targeted it all the way to this level also. So I hope you're understanding what I'm saying, guys. How you could have easily traded on uh, traded. And coming to daily analysis, you can see on Saturday the market showed a huge kind of bullish momentum, and next target is this candle over here. We should always expect this high to be broken In case if the market closes above this high, we could expect another high. But here you can see the market faced rejection from this high and closed below this range. You can see if you consider this high of the market almost closed below this range. So what you could have is to plot the high of that candle and look into a 5 minute time frame and see how the market behaved on Sunday. So what you could have done is to mark the high of that candle. You can see the market came, broke this high. This is yesterday's gap level. Now let's look into Sundays, guys, and see how the market behaved on Sunday. So what we could have done is to mark the high of that candle. And in case if the market sustains above the high of yesterday's, we'll look for long positions. But definitely the market here broke this high, switched this liquidity, and formed a chalk formation. You can see clearly how the market clearly formed a chalk over here after sweeping yesterday's high, clearly changing the market sentiment from being bearish to bullish. And if you plot the low to high of this candle, what you can see, or if you try to plot the high to low of this candle over here, you can see the market trading below the 50 levels. Even though the market broke here, the market closed below this range over here. This is clearly the 50 levels over here. You can see now, guys. This is what I'm explaining. Even though the market here broke that high, the market again closed. Or you can consider this order block level also. You can say that this is the last up candle. So you can consider this order block also, or you can consider this order block. Definitely there is one single more, guys. So yeah, I hope you're understanding, guys, this important point why this candle is very important, because this is a sweep of liquidity, guys. You can see the market swept this liquidity above yesterday's high and formed a shock formation, clearly changing the market sentiment from being bullish to bearish here. And after this, the market again retraced, took support from this 200 moving average and failed to make an higher high. Instead, again, the market broke structure towards the downside, forming a chalk over here. You can see clearly the market formed a chalk. And if you consider the swing momentum over here, and if you try to plot the fib levels, the high to low of this candle, so you should always wait for 50 levels or the 0.38 level. So let's like to mark the 50 levels over here. You can see the market came here to this 50 levels, or if you consider the common point within this, to the common point within this, what you could plot is the 50 level over here. Let's try to mark this 50 level, guys. Since the market here broke chalk, again the market formed a break of structure over here. And what we need to see is that this support over here, this 200 moving average, will act as resistance. Definitely you can see the market here acting as resistance. And what you can see is that the market showed a final support over here, but clearly the market formed a chalk over here. You can see clearly here the market, in case if the market sentiment would have been bullish now, guys, what the market behave after this kind of momentum towards the upside, again taking support here, the market would have made an higher high. Instead, the market failed to make an higher high. Instead, the market came and swept this high and closed below this level, guys, below the last support zone. So you could have easily plotted the chalk formation, the common point within this to the common point within this, and mark out the 50 levels over here. You can see this is the 50 levels where you could have easily marked. And in case if you try to plot the Fib extinction levels, the common point within this to the common point within this to the common point within this, you could have targeted the 100% move here, the 1.68 level, or you can see the market came all the way to 2.6 level, guys. Or you could have expected some kind of imbalance over here. So you could have expected the market to reach towards this order block levels. So if you consider the order block level, this is the last down candle now, guys, which actually broke structure towards the downside. You can see how the market came and even broke the order block level as well. So you could have traded it all the way midway between this order block level as well. So it's fine, guys. What's our entry is to trade based upon minimum risk to reward ratio. See, our risk is just not even one candle, guys. It's just 5 to 6 pips. And what you could have traded is all the way towards the downside. This is how you could have traded. And here you can see the market again retraced to these levels over here. You can see if you consider this swing momentum, which actually broke structure over here. This is a clear break of structure. And this is the 2.68 target, I guess, 2.61. So if you consider this swing momentum, guys, the common point within this to the common point within this, again, the market retraced to 50 levels over here. And what the market here did here is that the market failed to make a lower low here. Instead, the market broke structure towards the upside, changing the market sentiment from being bearish to bullish. So here is the internal chalk formation, and what we need to see is that after this chalk formation, we should always look for long trades. So if you consider the common point within this to the common point within this, you can see price taking from 0.38 level over here. This is the 0.38 level where the price is taking support. And if you try to plot the anchor VWAP levels, you can see price taking support at this level. So what you could have done is to take long position here, keeping your stop loss just below 21 moving average. And if you try to plot the fib extinction levels, the common point in this to the common point in this, you could have targeted it all the way to this 100% move. This is where you could have targeted this. I hope you're understanding what I'm saying. You could have waited for this chop formation. After that, you could have waited for this retracement as well. And here you can see the order block has been mitigated here. And after that, the market retraced, but here it took support and actually broke structure towards the upside. And the market came and mitigated this order block level here, guys. You can see this is the last up candle over here. This is the 1 minute order, 5 minute order block. There was fair value gap, even though the market even broke, it failed to close above that candle, clearly indicating bearishness. So, in case if the market sentiment would have been bullish here, guys, the market would have continued further. You can see the market after this kind of huge bullish momentum, trading above the 200 moving average, above the VWAP level, as well as the anchor VWAP level, as well as the 9 as well as 21 moving average, where price is taking support, and market would have made an higher high. Instead, the market failed to make an higher high here, as you can see. The market here failed to make an higher high like this to make a lower low. Market failed to make an higher high, and you can consider this to be a 50 levels also. And the market mitigated this fair value gap. So what market did is market clearly broke this low here, clearly forming chalk formation, changing the market sentiment here from being bullish to bearish. And if you try to plot the daily VWAP level, you can see after this the market clearly broke. And what you could have considered is to mark the fib levels over here, the high of this candle to the low of this candle. You can see if you consider to mark the swing over here, guys, you can see the market here retraced all the way to 0.38 level over here. This is the 0.38 level where price retraced after this chalk formation, where the market formed a chalk, closed below this level, and continued towards the downside. So after this kind of chalk formation, guys, and this is the daily VWAP, and let's try to take this anchor VWAP level out. And in case if you try to plot the fib extinction levels, the common point within this to the low of this candle to the high of this candle, you could have targeted the 1.68 level over here. You can see how the market came all the way to the 1.68 level over here, or you could have targeted this swing low. Mm, so, or the 2.68 level, but definitely the market didn't reach all the way here. But definitely you could have targeted this level over here, guys. This is the 1.68 level. So taking a short position here, keeping your stop loss just below above that candle and targeting all the way to 1.68 level. And again, the market retraced all the way to these order block levels, again mitigated and continued further selling towards the downside. So after this kind of momentum, also you could have taken short scalps. But let's not consider that into our trade, right? After this kind of rejection candles, also here you can see the market clearly broke the 9 moving average, the day VWAP level, as well as the 21 moving average towards the downside. So you could have easily entered short position, keeping your stop loss just above that candle. For this to consider as a confluence, guys, one is the sweep of liquidity of yesterday's high and the market forming a chalk, and market here breaking the 921 as well as the day VWAP level, clearly signifying bearishness. And you could have considered this momentum, the 100%, this swing low as your target. Or in case if you try to plot the fib extinction levels, now guys, the high to this low to the high of this candle, you could have targeted it all the way to this 100% move over here. You can see this is the 100% move where the market came and reached the 100% move. So short position here. So you could have targeted it all the way to this zone over here, guys. So I hope you're understanding what I'm saying. After this, the market showed some kind of bullish sentiment, but here, even though the market broke this high as well, you can see clearly the market here broke this high, forming a chalk over here. But after this, the market again reversed towards the downside, clearly changing the market sentiment from being bullish to bearish. And even the 200 moving average support over here, or in case if you try to plot the anchor VWAP level at this swing high now, guys, you can see the market facing resistance over here. Or you could have even plotted your anchor VWAP levels at this swing low and see in case how the market here might face some sort of resistance. But this chalk momentum, guys, which definitely wouldn't have happened. So definitely the market sentiment would have been bearish. Or you can see after this stock formation also, guys, in case if you might have missed out on this trade, you could have plotted the order block levels here. And once if order block has been mitigated, you could have targeted it all the way towards the downside. This is a clear 5-minute order block. And you can see how the market here also mitigated the order block, and you could have even scalped this position as well. So these are the trade setups, guys, where you could have easily taken this one short setup. This was another short setup. This was another one short long setup, and this was the short setup where you could have taken. And we should always look into a higher time frame and analyze how the market sentiment is here, guys. And based on intraday bias only, you should always trade whether the market sentiment here being bullish or bearish. You can see clearly the market sweeping yesterday's high and forming a chalk formation, clearly signifying market sentiment here from being bullish to bearish. That's about the trade, guys. I hope you're understanding what I'm saying. In case if you find my videos helpful now, guys, please like and share and comment. Saturday and Sunday volatility will be very less compared to the weekdays, guys. So you can expect some kind of sideways momentum, but definitely this Sunday there was some kind of good momentum in trades where you could have easily plotted a good opportunity either into the buy side or on Sunday towards the sell side. So if you have any doubts, guys, please leave a comment below, or Instagram is a way to go. You can directly message there. So I would be in touch with you. And thank you, guys. Keep supporting my channel. That's it, guys.